Good morning, traders, and welcome to Phoenix Blues morning update on Thursday, the 16th of June. My name is Nishal Patel, and I'm going to be taking you through the markets for today. Just give you a quick rundown of what's happened yesterday, how the markets concluded, and most importantly, how we expect things to pan out today. So just starting off with some key data in regards to the indexes. As we can see, starting off out in stateside and how they've finished off. After a brief rally, as we can see, all three of the major indexes out stateside, the Dow, S&P, and the Nasdaq, finished in negative territory. They did come up and test some higher prices. But they fell back very shortly afterwards. Obviously, a lot is going on right now in the marketplace, and the indexes really on in the stock markets are having a bit of a torrid time. The FTSE, the DAX, and the Nikkei haven't quite opened yet, but they are due to open very, very shortly. But everyone is presuming that they're going to follow on from the Asian session, and as we can see, the largest indexes out in Asia did take a tumble as well. The S&P, after a brief rally, did fall back. Moving on forward straight onto something which is really important are the news announcements for today. Now, news has really been the impetus for change in the markets right now. We have got some very big announcements, not only on the USD but also the GBP. The BOJ had a press conference this morning, concluding off pretty much what we saw last night, which is what I'm going to discuss in a moment. With their monetary policy statement coming out in the early hours of our morning here in London, and Australia had said that some data coming out that really hasn't eased things for them either. But moving swiftly on, but just please be careful with the USD, and I just want to take you through the charts, and I think that's the best way for me to show you the impact in regards to what really is going on. So just having a quick look, we're going to start off with the yen. Now, the yen really is the big one. As we saw, we had some huge announcements just after 3 o'clock or just before 4 a.m. this morning here in London. Out in Japan, Bank of Japan they're keeping monetary policy steady. Straight off the back of the Fed. Remember, the Fed FOMC was last night, and as expected, the rates were left unchanged. So everyone that's in a protege group would definitely know that after us feeding information to them in regards to how NFP data came out, and most likely the fact that the Fed won't won't have any further rises. That has stayed true. No rises have been placed. Have been placed, and in fact, they've come to the conclusion that, and they have announced that we will probably most only likely see 2 further rate rises this year. But I'm gonna swerve back to that in a brief moment. Having a quick look at the Japanese. The Japanese yen right now. The BOJ did keep monetary policy steady, and they are having, I would say, a slightly buoyant view of their economy, but it's not too great. Now, what we're looking at right now is we have seen a huge slump in the last few hours. Part of that has got to do with the monetary policy, and partly down to the safe haven status that the Japanese yen's in right now. It's floating at 103.93. Remember, everyone was looking to the 105 level. That's marked on the chart right now as a key point that the Bank of Japan will jump into and potentially chase or potentially prop up their own currency and make sure it doesn't get too strong too quickly. Obviously, that is, as some people would think, is completely averse to what some people would think, that it could be a very good thing. It's far from a good thing. In fact, it can be massively detrimental to the economy, and most importantly, really hard for policymakers to be able to control their own inflation levels. So Bank of Japan thinking about things right now. Obviously, with Brexit looming and Japan's treated as a safe haven, people are actually thinking, and the market sentiment is right now, that we could see a break of 100 again, which I'm sure that whets our appetite as traders out there, looking for another decrease. Potentially, if things stay the same, I would probably expect some kind of retracement and correction on this move, even before we would look to get into this. It is far gone, as we can see, and there is a lot of news out this week. So could potentially see some intraday trading and some intraday profits taken on the yen. Looking at the euro yen, I would expect you guys to have a look at the euro yen and even the euro Aussie. We can see lows being hit there as well. So the Japanese yen definitely is a chart to watch. Flicking over from one safe haven to another, we're just going to flick straight over to gold. Now, gold has done really well. We've seen a break of 1300. And for the protege delegates, they have been in the know on this. Sorry, I'm just going to bring up the gold chart. There we go. As you can see, we've seen a break of 1300. We're looking at an hourly chart again. We've seen a high hit here of 1313, 68. Really, it's pretty much what we were expecting, but most certainly has really appreciated very strongly yesterday, over the course of yesterday. It's pulling back slightly right now, but please remember, with gold the way it is, it's not an easy bet right now just to take it long and just leave it in. By all means, for those investors that out there that are looking to buy gold bullion, anything I would say in the 1280 region is a great place to buy. Even for ourselves here at Phoenix Blue, we are going to be looking for gold to pull back in and around to the 1280 area before it's a good optimum position for us to be buying again. It's very easy to get onto the bandwagon and just trade it long. We have been trading this long, and we have been trading it long intraday. Had a position on yesterday that worked out very well. In fact, one in the morning that closed off at break even, and then another one was taken later on in the day, capturing a fair amount of profit. Gold is really well. This chart tells you a lot, and in fact, if we just flick over to a slightly larger time frame, which I'm gonna do now. I'm just gonna flick over to a daily time frame right now. We can see how the tables have turned on gold back from late April, and the prices of gold coming down to below 1200, or just below 1200, and then reaching the highs of 1300 in the space of a month. It shows you how risk aversion, or global risk aversion, is on the forefront of many investors' minds, and has boosted and bolstered the safe havens right now. Government talking about that, because of market sentiment and investors right now, there has been a huge influx of people investing into government debt. We've seen Japanese and German benchmarks for 10-year yields to record lows. So that shows that a lot of people are pushing in. Moving on from one commodity to another, and we're just going to flick straight over to another big mover right now. So we're just going to flick over to WTI. WTI, as we can see, is making its descent. It's something again that we were looking at from last week, when it came up to 50, and just moving over to a 4-hourly time frame so you can see it a little clearer. And it's currently sitting at 47.37. I was in a position yesterday from 47.77. Small position intraday, had taken profits. Obviously have been taking profits since last week here at Phoenix Blue. So it's another one that's also on the move. But again, this is another commodity which has fallen victim to the concerns that Brexit is playing on people's minds, as well as investors. So Brexit really is at the forefront of everyone's mind. Let's not forget how everyone is very, very concerned with potentially leaving the European Union, and I think that's the biggest concern for the global markets right now is the UK leaving the European Union. I think for us. Obviously, here at Phoenix Blue, we're going to stay completely impartial to the debate. All we're going to do is state facts. But right now, as it looks, it doesn't look too healthy for everyone else globally, and it may not look too good for us, especially for our own currency. And saying that, we should flick straight over to sterling and see the damage that's been caused on cable right now. So we're just going to flick straight over to cable, and I'm just going to move over to a daily time frame like so. As we can see, sterling is sitting at 1.4178. So having come off the highs of 1.47, really is coming down to the low or the lowest point in this trap or this range right now. I'm just going to condense up the chart so you can see just from the start of the year, we're pretty much coming very close to that 1.05 zone that I've got highlighted on this chart. Could potentially see an easy break in that if further polls show that we may be more prone to leaving and staying with the out campaign rather than the in campaign. I think any poll showing that we're more likely to stay in would take sterling, would increase the rate of sterling, and obviously this chart would start shooting up north and look very, very bullish. But that being said, right now it's very easy with, well, I'm surprised how little this chart has moved in comparison to yesterday's FOMC statement. We have seen a certain amount of volatility, but I think with the dollar right now, it doesn't look too strong. It looks a little shaky, if I'm honest. The greenback isn't performing too well across the basket of currencies that many people watch and observe on the DX chart or the dollar index chart. It's down 1.5% against the yen, which is its lowest, which has been its lowest since late 2014. And also it's also a little down against the euro as well. So guys, the big talking point right now is for us, Brexit, and that really is taking center stage right now. It definitely took a huge, well, it was definitely taken into consideration yesterday by the Fed, and I think they were very concerned with the Brexit, and that was another reason not to increase or have a rate hike. Remember, most likely all we would expect is a 25 basis point hike or 0.25%. We're not seeing that. Probably may see that next month, but they have announced that we will only see potentially 2 further hikes this year, which doesn't guarantee a hike next month in July. But I think the question is raised is we're in the policy meetings later on in the year. Will anything happen, and when will it happen? I think it's going to leave. I think it's going to leave the greenback a little shaky. So I don't think we're going to see as much dollar strength, unfortunately, as we may want to see, especially with the markets the way they are. So guys, please again be cautious. There is a fair amount of news out today. So again, take side of caution. Okay, guys. Until next time. Happy trading. Bye bye.